1963, our top income tax rate was 90%. We had over 15 different tax cuts, and the highest was 90%. And in today's dollars, that was at about $2.5 million. It was a huge change in 63, where they cut it down to 70% as the top tax rate, at around what would be $500,000 in today's dollars. So sort of at this. Now, before you get too worried about this, business owners, AGI, so not the total amount that comes down, you're still gonna, this is at 400 and 450 after you take out all your adjustments. Fundamentally, we've been in 2 years of kind of a stable 2% steady growth kind of economy, and that trend has really gotten lost in the politics, the clouds of the politics. And I think that we will continue to lose that for at least the next 6 months. I think the economy will be stable. I think we'll lose some of that optimism in political swings. And as soon as we figure out the U.S., let's be clear, the media is going to then again make news out of what's going on in Europe.
Joining us to talk about that interview in the market, Elizabeth Miller, president of Summit Place Financial Advisors. What's your view of what's most important?
Well, there's a couple items I really want to watch this week. I think the Humphrey Harkins testimony is going to be secondary. We saw the move the end of last week. The market digested it pretty well. I'm interested in the Case-Shiller. I think we've seen...
the latest housing...
Yes, I was going to say, I think we've seen some volatility in housing and some concern creeping up whether the residential housing market is really find some stability. So we're going to get Case-Shiller pricing tomorrow, and then on Wednesday we get the new home sales. I think the two of them will be a focus point this week. And then I think the retail earnings. I'm focusing particularly on Gap. I think we're going to see a little bit of a surprise coming through there.
Good or bad?
Good. I think we'll see some positive comps, and I think we'll see they still have room to pull margin through, and I think investors will want to see that and think about it across all retail stocks. I don't think the absolute numbers of Alcoa are going to be that important. It's going to be a very good comparison to last year, and we're going to see that throughout earnings seasons. Remember, this first quarter last year was just dismal for companies. A mixed bag whether it was better or worse than fourth quarter '08. So companies have very easy comparisons. For Alcoa in particular, the issue is much broader. It's really about the aluminum market, the difficulty of price increases coming through that market, and investors who are focused on Alcoa will be looking for comments really specific to what management sees in that industry and the pricing environment.
So many times we're working with a professional in any of these areas that talks to us in a very small way. What do you want to do with these funds? Oh, moderate risk. But we haven't identified for ourselves what our real goals are. This book helps you think about short-term goals, maybe putting someone through college, maybe some upcoming weddings, longer-term goals, maybe a second home, a vacation, what that lifestyle you want to see at retirement or for a legacy, and then starting to organize all your affairs, your investments and the rest of the affairs, all pointed to those goals and allowing you to do in a way that you can track them so that the next time someone says, how are you doing, you can honestly say, I'm right on track for what's important to me or what I'm trying to achieve. Many financial professionals can meet with a couple, meet with a client, and suggest a allocation, a strategy that seems to make sense on the facts. But if you don't first understand where their money values are, does money represent opportunity? Does it represent risk? Does it represent security? You can get a disconnect between the investment strategy and the client's feelings about money. Well, what is that success? What does it look like to you? Is it inheritance to your grandkids? Is it an endowment? And try to get them off just measuring a number and thinking about success in a different way so that we can manage that money again without them losing discipline in different market environments.